Dow Jones slides close to 240 points as Wall Street ends February with losses. The S&P 500 ends the month 2.5% lower. The Nasdaq is down 1%, while the Dow Jones finishes with a 4% cut. Stocks in the Asia-Pacific open mixed. Chinese manufacturing PMI for the month of February beats estimates. The SGX Nifty suggests a mildly negative start to trade for the Indian market. Oil prices rise nearly 2% on Tuesday, erasing losses from the previous session as hopes for an economic rebound in China offset concerns over the impact of interest rate hikes on U.S. demand. Brent crude currently trades around $83 per barrel. And third quarter GDP growth comes in optically lower at 4.4%, but that's more because GDP growth for FY22 has been revised sharply higher to 9.1%. GDP for FY21 has also been revised higher for the third quarter of the current year. The push has come from strong capex growth while consumption has slowed. Axis Bank completes the acquisition of Citibank's India consumer banking business 11 months after the lenders inked a deal. The transfer of all verticals effective from today helps Axis Bank add 30 lakh customers. And the two-day G20 foreign ministers meeting to kick off in New Delhi today. Foreign ministers of Russia, Australia, Turkey and Brazil arrive in the capital. The Chinese foreign minister is also expected to be present. Prime Minister Narendra Modi will address the convention. Hi guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you as we get into this brand new trading day. There's lots going on, but first up a look at the global markets because once again, the handover from Wall Street has been extremely negative. We will talk about that, but first up, let me take you through the reaction that's coming through in the Asian markets. It's not quite as bad at all. In fact, a market like the Hang Seng, it is at the high point of the day, but it's up 1.4%. You have Taiwan with a 0.3% cut coming through right now. Most of the markets are in the red, I have to say, but Hang Seng is holding up well in the green, like I pointed out. Shanghai and Straits also in the past couple of minutes have moved into positive territory. So no big moves, but both of them around 0.2% higher. The Nikkei markets are also erasing some of the losses, but it is still it's quite flat over there. So it's 0.2% lower for the Nikkei market. Taiwan seeing cuts of around 0.3% as well. So very mixed as far as the Asian markets go. The SGX Nifty is up on your screen and it is indicating a little bit of a lower start for our own market. So 30 points lower is what we have on the SGX Nifty. That's what's going on in Asia, but let's also talk about the US now. Wall Street ended Tuesday's trading session lower, so the Dow Jones lost over 230 points. The S&P 500, like you can see on your screen, was down 12 points, and the Nasdaq Composite also saw a similar kind of cut at the end of the trading session. In fact, all of the major indices have posted a negative month. This is for the month of February that we're talking about. So sharply lower coming through. The Dow has been 4% lower for this month. The S&P 500 and Nasdaq Composite have lost around 2.6% and over 1% respectively. So that's the kind of cuts that we've seen coming through for the US markets in the last month. But with that, let's also bring you some important opinion. This is from Goldman Sachs. And listen in to what the CEO has to say on the inflation picture.
There's been a shift over the last 6 months. I think there was a lot of pessimism around the chance that we could get through this cycle without a real recession, given how quickly we were changing economic conditions. We've now been in a period of 9 months where we've had a real tightening of economic conditions. Obviously the impact of that will lag. We've taken inflation from double digits, down, more to 5, 6. I think the general consensus is inflation is going to be stickier. When I talk to CEOs, stickier and harder to move, from where it is now, down to 3%, let's say, let alone 2%. Right. And in the context of that, higher rates, longer, sluggish growth, stickier, but a better chance that we can muddle through with a softer landing. And so I think there's a little more optimism because people's businesses have been performing better.
All right, maybe a little more optimism right now as businesses could, try to do a little bit better right now. But that's what's happening globally, and that's an important opinion that we're tracking as well. But let's now talk about all of the important cues that you should track as we get into this trading session. We have our research team here with the trade setup, as well as the individual stocks that could be in the news today. Nigel, Sonal, as well as Surbi all join me now. Guys, a very good morning to all of you. Sonal, let me come across to you first. Once again, the handover is quite negative.
It is. And, Pavitra, if we look at the US markets, after a brief green that we saw on Monday, yesterday again it fell. And if we look at the US indices, they fell anywhere between 0.1% to 0.7%. And Dow Jones was down more than 200 points in trade yesterday. And the Feb month has ended. And for the month as well, there are major losses that we are seeing. It was again led by the Dow. Dow was down 4%. We have S&P down 2.6% and the Nasdaq down 1.1% as well. If we talk about the Asian markets, you were just talking about them as well. So Hang Seng, that is the lone green index, so to say, on the higher side, 320 points higher there. However, we have Taiwanese index, which is low by 40 points. So a mixed picture as far as the Asian markets are concerned right now. SGX Nifty will come up for you, and it is indicating that the start for our own markets could be mildly in the red again. And we did close lower yesterday. So fell for the 8th straight day. That is the scene as far as our own markets are concerned. Market cap erosion of BSE companies in last 2 months has been at 25 lakh crore rupees. That's the highest number that we have seen. Last hour decline that we saw in financials, that was led by the Fin Nifty expiry. And Nifty is now below that 200-day moving average. So Monday's low of 17,255 is an important level to track as well on the Nifty. We have a couple of cues which we'll be watching out for. We have Feb auto sales data, which is due today. It is the beginning of the month. And we got the GDP data as well yesterday for Q3, which was slightly lower than estimates. But of course, there are many internals there. But all in all, looks like it could be another day in the red for Indian markets.
All right, Sonal, thanks a lot for taking us through all of those cues for our markets. But let's now also talk about the individual names that could be in focus in today's trading session. Surbi standing by with that entire list. Hi, Surbi.
Hi, good morning. Few stocks that I will be watching out for today. The first one is Axis Bank. It completes the acquisition of Citibank's India consumer business for a consideration of 11,600 crores. Next is Adani Enterprise. The company has been declared a preferred bidder and gets a letter of intent for a bauxite block in Odisha. Zydus Life Sciences gets approval from US FDA for 2 drugs, one that treats blood clots and the other one that treats high blood pressure. BEL signs an agreement with Thales Reliance Defense System. Aditya Birla Capital, it collaborates with NPCI to develop and promote digital payments. And lastly, Bombay Burma Trading Company. The company decides to sell close to 2,500 acres of land for 290 crores to Orange County Resorts and Hotels.
All right, Surbi, thanks a lot for that entire list of stocks. We're going to watch for all of these in today's trading session. Finally, it's over to Nigel, who's looking at all of the cues from the futures and options space. Hi, Nigel.
Well, morning, Pavitra. Now, we've been listening to all that you all had to say, and the global markets are a bit of a muddle. But maybe, in fact, if the SGX Nifty suggests that we're going to start off with the cut of closure around 50 points odd, maybe risk reward could actually favor a buy today, and maybe taking a fresh short call on the index at these levels may not be very beneficial. That's predominantly if that 17,200 odd level holds out. Remember, the PCR has dipped to below 0.7. And the FI short positioning has moved to around 85%. And normally, we've seen a bit of a bounce from those levels. The Nifty, maybe we ended lower yesterday, but there was a relative outperformance. Whether you're looking at the Nifty Bank, that was more or less flattish. And the mid-cap index, there was buying out there. It ended with a gain of 0.7%. What did the FIs do in the F&O market? Well, they continued their shorting ways. They added closer on 13,000 short contracts. So that's what takes the short positioning to around 85%. Though they're buying, index options. And yesterday as well, they bought more calls than puts. However, the call writing continues, telling you that at higher levels, you're likely to see some supply. And what were they writing? 17,300 calls, 17,400 call. They were most active. And if you're just plugging in the number, 17,400 call, you add closer to 40-50 rupees. So that's giving you that 17,450 odd level. So they're looking to defend that 17,450 to around 17,500 odd level. Support zone comes in at around 17,200 to around 17,250, which will likely start off closer to those levels. SGX Nifty is suggesting a downtick. You're hoping that actually you get a deeper downtick. Maybe if 17,200 does hold out, maybe we'll see a day of consolidation or maybe a bit of a bounce. So let's see how this plays out. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues. So it looks like a bit of a weak start, but let's see how the session moves from there. With that, we have to get into our first short break on the show. But on the other side, we're going to get you a complete breakdown of the Q3 GDP numbers that came through yesterday. So stay tuned. Hey guys, welcome back. You're still tuned into Power Breakfast, and let's bring you some important macro data that came through. GDP growth in the third quarter has slowed down to 4.4%. This is versus 6.3% in Q2 and versus the 4.7% forecast by our poll. But remember, this is more because FY22 and FY21 GDP numbers have been revised higher. So Lata is here with the key takeaways. Lata, take us through the highlights from this quarter, and also what is this massive revision that has come through?
Yeah, first, the third quarter is 4.4. Not as good as our 4.7, but I wouldn't split hairs on that because, like you said, the base has been revised higher. And how? You know, FY22 GDP has been revised higher by some 2 trillion rupees, from 147 to 149 trillion rupees in real terms, okay, not nominal. So therefore, the FY22 growth actually is 9.1, not 8.7. You know, 40 basis point revision is pretty steep. And likewise, the previous year, FY21, we thought we were minus 6.6. Actually, we are minus 5.7. Now, that again is a very big 90 basis point revision because the GDP is actually about 1.3 trillion more than was originally estimated. A lot of GDP data comes late, so these revisions are par for the course. But we have to concentrate on Q3 GDP. And over here, what's done well first? Services, what you call trade, hotels, transport, communication. That's a big sector for services. That's grown very well at 9.7%. We were expecting double digits, but here again, the base is revised higher. The other things that have done well, construction has done very well. Utilities, I mean, you know, power, gas, that kind of utilities. Those also growing at 8.2 is very good. What's not worked? Manufacturing. Terrible. Minus 1.1. Contraction. And public administrations, all the government services, you know, schools, education, defense, etc., which the government does, that's just 2%. Government has not spent much. Obviously, they are constraining their fiscal deficit. But you can look at not just by output, but from the expenditure side. If you look at GDP from the expenditure side, there's bad news. Because private final consumption expenditure has grown by only 2.1%. Government expenditure has actually fallen by about 0.5%. What's clicked is capital formation, investment, gross fixed capital formation up by a huge 8.3%. So what we are very clear, I mean, three key takeaways. Now the economy needs to grow by 5.1% in the current quarter to achieve 7%. Looking tough because in a good third quarter, excellent festive season, you know, good consumption, we couldn't make it to 5%. 5.1 looks tough. And secondly, consumption is pretty weak. We hope that, you know, capital investment will help us improve productivity, but I would worry about consumption.
All right, Lata, thanks a lot for taking us through all of that data that came through from the GDP yesterday. But with that, let me also bring you a word from the Chief Economic Advisor. The government is sticking to its 7% growth forecast for FY23. That's what Anant Nageswaran is saying. He says that inflation is gradually softening, but flags caution over an uncertain monsoon and the possibility of an El Nino. So let's listen in to that.
Inflation is softening. The pass-through from wholesale prices has run its course. Of course, we know that there have been some slight uptick in the inflation data for January, and RBI also has maintained its forecast that inflation will come down gradually. And we do have some uncertainties related to now the monsoon because of the El Nino activity, etc. So it is something that where we need to be ready with both supply side and monetary policy measures in the course of the next financial year.
All right, that is the word coming in from the Chief Economic Advisor. But with that, let's move on to another important story. Axis Bank has completed the acquisition of Citibank's India consumer banking business. So Abhishek is joining us now with the details. Abhishek, take us through what this really means for Axis as well.
Well, it's a good deal that has now got consummated. So Axis Bank completes the acquisition of Citibank's India consumer business. So transaction cost is about 11,600 crores. This was estimated at about 12,325 crores earlier. So a saving of around 700 odd crores over there. CCI had approved this transaction in July 2022. So what is in store for Axis Bank over here is that Citibank has a unique 30 lakh customers which gets added to the base of Axis Bank. So the credit card balance sheet that can have an additional 25 lakh customers getting on board of Axis Bank. Branch expansion will aid the loan growth. Now Citi Wealth and Private Banking that has an AUM of over 1,10,000 crores. So that also comes into the business. Deposit accretion can be seen of more than 50,000 crores through this acquisition in this quarter. Salary business of Axis Bank will strengthen post the deal, and you have the proposed transaction which will add about 6.6% to the deposit base, about 11.2% to the CASA or the low-cost deposit base, and about 3.7% increase in loans. So a strong business momentum can be seen for Axis Bank in Q4 through this acquisition. Back to you.
All right, Abhishek, thanks a lot for getting us all of the details there. Like Abhishek was pointing out, this is a good deal for Axis and 11 months after it was originally signed. But with that, let's also bring you the latest from the Axis Mutual Fund front-running case. Now, SEBI has now barred 21 individuals, including Viresh Joshi's former chief trader at Axis Mutual Fund, from the securities market. This is over alleged unlawful gains worth 30.5 crore rupees from front-running. And they've also directed the 21 individuals to deposit this amount in as penalty in an escrow account within the next 15 days. SEBI has also imposed restrictions on debit card transactions from the bank's account of the 21 entities. So that's some important information that we wanted to bring you up to speed with on an important case. But with that, we are going to bring, slip into a short break. On the other side, we're going to shift focus from equities and talk all about the commodity market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast, and let's talk all about the commodity space now. Manisha joins us with an update. Manisha, good morning. What are you tracking today?
Well, I'm looking at the industrial commodities and a big push coming in from the Chinese cakes in PMI data, which for the month of Feb has seen the first improvement in 7 months at around 51.6. This was 49.2 in the month of January. So we are looking at better numbers coming in from China, and that clearly has supported the commodity markets in Asia right now. So the crude oil prices, after posting 4 months of decline, have started the month of March on a positive note. We also are looking at the OPEC output continuing to decline. For September, we were at 29.67 million barrels. For the month of Feb, it has been at 28.97. And the U.S. production also has seen a decline. So various factors which seem to be right now supporting the crude oil prices. It's a similar view for the metal prices also. So whether it's copper, aluminum, zinc, we've seen all of them start Asia today on a positive note on the back of Chinese PMI numbers.
All right, Manisha, thanks a lot for getting us all of those details from the commodity space. But with that, we're completely out of time on this edition of Power Breakfast. We leave you with the news that the Asian markets are quite mixed this morning. Hong Kong markets doing very well, up, around 2% right now. The Nikkei market's absolutely flat, but the SGX Nifty is indicating a bit of a weakish start. So let's see how it pans out. Thanks for tuning into Power Breakfast. Bazaar Morning Call is up in 2.